The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Our stock of the day is Paladin Energy, the uranium miner, taking a bit of a hit today, withdrawing its production guidance for FY25. The company's activity at its Langer Heinrich mine in Namibia in West Africa was suspended for a couple of days due to heavy rainfall. The uranium mine has now reopened, but production has been significantly disrupted. Paladin saying it expects improved production levels in the second half of this calendar year. The production update, another one expected next month, in fact. But shares down around 6.5%. In fact, you look more broadly in the uranium miners, they're all taking something of a hit today. David, what are you seeing with Paladin, and is this perhaps reflecting what we're seeing with the spot uranium price at the same time amid, I guess, that geopolitical uncertainty, whether also the effect of those tariffs, that's an unknown as well?
Yeah, well, look, the AI sector, with the, what do they call it, the deep sea, with the breakthrough there requiring less energy, since that was announced, that's when the uranium price came under pressure. So obviously there's a few short sellers I can see happening in the space, especially in Paladin and Boss Energy as well. So right now it's they're not. They're slightly cash flow positive, but until the uranium price recovers, because it's last time I looked it was about 65 US a pound. And that's fallen from about 100 US a pound. So it's not particularly bullish at the moment. But longer term, if we see a recovery in uranium prices, there's my chart. That's a weekly chart there that you can see going back to 2020. You can see where it peaked out, which is where around $18 with the uranium price, and you can see it's clearly on a downtrend here. Those two lines there, that's a 20-week moving average on the red line, and the blue line is a 50-week moving average. So you can see when the red line crossed below the blue, that means there's a change of trend from up to down. So right now, just based on the trend, you would not be buying Paladin, and plus the fundamentals don't stack up right now to be rushing in to buy until we see a recovery in the uranium price.
All right. So your call is?
My call is sell. I'm playing the gold sector right now because that's the most bullish sector.
Yeah.
So I'd rather go into something that's going up, not down.
Yeah.
Unless you
sounds obvious, but it's often
unless
harder.
you want a tax loss, of course.
Yeah, well, exactly. All right, Michael, what do you see?
Yeah, look, I've been following this sector. I think that there'll be fireworks later this year. It's not happening at the moment. So look, cutting to the chase, Paladin, it's trending lower. You need to wait for that trend to turn higher. It's effectively been following the spot price, which is extremely illiquid in this space. So the shares are back to where they were sort of mid-2023 when the long-term contract price was sitting at around $56. It now sits at about $80. So if it was actually reflecting contract pricing, the shares should be sitting around sort of $10, $11. But obviously it's moved with a spot price, which has basically come back on next to no volume. So in terms of today's announcement, what's really interesting is the processing plant hasn't been affected. So their roads have been affected by the flooding. And there's a bit of water obviously in the mine. But with Paladin, they're not mining yet, they're processing stockpiled ore. So what's happened is when they start mining, that date is going to get pushed out a bit because they need to fix the roads, they need to get the water out of the mine. So yes, it's a negative effect with what's happened, but it's actually not that big a deal in the grand scheme of things. What's very interesting is that next to Paladin, there's two other very large uranium mines run by a couple of Chinese companies. I didn't listen to the conference call this morning, but apparently it was noted that those mines have most likely flooded as well. So that actually knocks out quite a bit of supply. So the interesting thing about this space, and the reason why I like it, is because You've got demand. Demand has been increasing, and this is not even taking into account the whole AI thing. And supply is struggling to keep up. And we continue to see events like this which continue to put pressure on supply when demand is only going to increase. So that's why I think there'll be fireworks at some point when the utilities come back to the market and need to stockpile more uranium. At the moment, there's a bit of a standoff. Clearly that needs to get resolved. In the meantime, you've got a downtrending stock. So look, one to keep an eye on. Look, I'd be happy to hold it, but I think in terms of the chart, you really need to see that improve. And look, even if it's up 30, 40% by the time we can declare it's back in an uptrend, I think that's fine, because I think the upside from there is much greater. Obviously, gold's doing really well at the moment, but I think if you're looking for the next space that should do what gold's done in the past 12 months, it's this one. It's just not ready yet.
That is our stock of the day, a sell and a hold for Paladin.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.